Some good news too. We get in the macro markets, of course. Inflation a little bit lower than expected this month. Maybe
Actually,
a bit of a silver lining. Hey, it's only 7.9%.
Only
like
7.9%. All right.
Bankless Nation, happy second Friday
Happy
of November. Maybe I should have said unhappy, David. I see you've got the Wojak meme
Yeah, sad boy.
covering your face. You're
Sad
feeling
boy.
pretty sad today.
Yeah, it's not a good week.
It's been a rough week in crypto. Probably the worst I've seen in terms of sentiment, in terms of feeling. Walking into this roll up, I mean, how many live streams have we been doing over the last few days? 3, 4?
One per day since Tuesday. So this will be number 3. Yeah. Well, this isn't a live stream, but still, feels the same.
You and I were up late last night with Kobe and Ledger.
Oh yeah.
Up only.
So
having
4th. Yeah, this is number
therapy
4
session.
Yep.
I mean, but there's just so much to cover, so much to talk about, and the way this event has unfolded. For those of you not familiar, of course, we're talking about FTX, SBF, how SBF, Sam Bankman-Fried, wrecked this for everyone. I mean, he really screwed us over, and we're going to talk about how we feel about that, what's been happening since, I guess, yesterday, give you the summary of what's happened this week, and talk about picking up the pieces. I guess grab your morning coffee, or maybe something a little stronger.
Yeah,
if you need it today.
Put some Baileys in that coffee for
Did
sure.
Are you a Bailey's plus coffee? No, you. Hey, you told me if you put anything in your coffee, it becomes a beverage.
Yo,
you take
the people need a beverage this week, this Friday.
David makes exception for Bailey's. We're going to talk about that. That's going to be a big subject, I think. Get you guys up to speed. And even a lot's happened since the last time we live streamed. Got off the live stream at like 1 a.m. last night. Also, we are 1 year anniversary from all-time highs. Isn't that ironic? All-time highs in the
are we supposed to be happy about that too?
How far are we down from all-time highs? I mean,
76%. Crypto market cap is down 76% from 365 days ago. So, congrats. It is worth noting that it's about 1 year of time from the 2017 top to the 2018 bottom. That was also about 1 year. And then we had a 2-year bear market where we touched that same bottom 2 more times. And then it was DeFi summer.
Some good news too. We get in the macro markets, of course. Inflation a little bit lower than expected this month. Maybe
Actually,
a bit of a silver lining. Hey, it's only 7.9%.
Only
like
7.9%. All right.
Happy days. Okay, guys. Of course, if you enjoy the roll-ups, if you enjoy the work that David and I put into the podcast, and everyone behind the scenes making this happen, make sure you like and subscribe. Rate and review. That's how we get the top of the charts.
It's how you get me the dopamine hits to keep on doing this. Which I could
because
use.
Weeks like this, it's kind of hard.
It's rough. It was a rough week.
I mean, we'll get into more of that later. But first, some good news from our friends and sponsors at Earnifi. If you're feeling down, why don't you plug in your wallet, your crypto wallet, your Ethereum address, in the space where you can maybe find some unclaimed airdrops. I had a friend last week text me and be like, oh, I listened to that, Earnifi. I plugged some of my addresses in, and I walked away with $3,000.
Oh, he got some dopamine? Good.
Yeah.
Good. It's a little dopamine
Not
finder.
just dopamine, David.
Money.
I mean, this is cold, hard cash.
Yeah.
At the end of this, what does Earnifi do?
Yeah, Earnifi takes your Ethereum address, and then it scans the whole library of airdrops, POAPs, NFT mints that you may or may have not gotten. And so it's just like it's a little robot to make sure that it goes and checks all of your pants pockets for the $20 bill that you left in your pants pockets. But airdrops tend to be worth a lot more than $20. So all you have to do, it's free to use, but you can sign up to get some extra perks and privileges. It's free to use. You can just put in your Ethereum address, and it will go scan the blockchain to make sure that you haven't left any money in any corner of Ethereum or any other blockchain for that matter.
Good to go find your money right now on a week like this. Go to bankless.cc/Earnifi. That's EARNIFI to find out more about that. All right, David, let's get into the markets. Deep breath. You ready?
Yeah.
Okay. Bitcoin, what's it looking like?
Bitcoin started the week at $20,275, down 14.5%. Congrats, Bitcoin, for setting a new low for the year, a new low in this bear market. We've ticked the bottom at $15,513. We are currently at $17,300. $300. So hit a low of 15,500, the new low for the year, but back up to 17,300.
David, I'm going to be honest. I wasn't sure we'd ever see 15K Bitcoin, but now 10K Bitcoin and under is in sight, right? I mean, we're like 50% off of that. And what's crazy is this is 365 days of down, right?
To the day. Yeah. Well, tomorrow will be 366. But yeah, we are at the 1 year anniversary of the Bitcoin all-time high, where the high was 69,000. Nice. $44 for Bitcoin, down about 74% from the all-time high.
Pretty brutal. Yeah. I mean, I've seen worse though.
I've seen worse. Worse.
I mean, last cycle, what did Bitcoin get down to 83% from all-time high, like 85%, something like this. Of course, Ether got to 94% all-time high. Speaking of Ether, what's that looking like on the week?
Started the week at 1550, down 17.8% to where it is currently at 1270. It got up to as high as like 1330 earlier, but down to 1270 right now. So down 18% on the week.
And what's this chart showing us here?
The ratio, we are down 0.076 where we were last week to 0.073. Again, for what it is, if it was last cycle, Ether would be wrecked during a week like this. It's holding up okay.
It's holding up okay. Ratio's holding up okay, but down bad. So 14% for Bitcoin, and then 18% for Ether. Pretty crazy. How about the crypto market cap as a whole?
Hit a new low of $830 billion total market cap. We are bounced back a little bit to $910 billion. That lower than expected CPI print has saved us a little bit, created a little bottom.
A bottom. How about crypto punks? You wanted to put some NFT news in here, and there was a flippening that happened. It wasn't the ETH Bitcoin flippening, but it was a NFT flippening.
I am a biased punk holder, so take that with a grain of salt. But punks are now once again above apes. So the OG NFT now has a higher floor price than the apes. One ape, a floor ape, will cost you about 60 ETH. A floor punk will cost you about 66 ETH.
Just a stronger holder community. Is that what's happening?
Perhaps,
Basically, it's kind of the the tourists leave, the settlers stay.
Yeah.
People with less conviction on other assets. I mean, punks are an older project as well.
They are the oldest NFT project. They are the OG. They are the Bitcoin of NFTs. Yeah. Mm-hmm.
So that is like the NFT of last resort, I guess, for this entire market. So that's interesting to see. Well, let's talk a little bit about the economy. Well, we're talking about, and then we'll get to crypto, but inflation has officially dropped to 7.7%.
Dropped to 7.7.
Yes. And we're happy about that. And the reason why we're happy is because last month it was 8.2%. And it came in a little bit lower than expectations. I think 0.2% below expectations. So you can see the chart here. This is like all the way from 1965 to 2023. And so you could say, maybe we've peaked. It's kind of looking like maybe we peaked sometime this summer from an inflation perspective, and we're on our way down. And I guess that would make sense because we're going to get to more things later, but there's layoffs. It's like the economy is turning. Interest rates, of course, have been hiked right up. How could inflation continue to rise if we are spinning towards recession? It really can't, unless we get some situation like stagflation, which should be even worse. So this is an expected drop. Maybe the good news is the Fed starts to relent on their policy. The good news, at least for markets. And what are we looking at here, David?
Yeah, this is the SPY. So SPY jumped 4.5% on this news. So the SPY index goes from 374 to 390, up 4.5% because of the drop in inflation. So market's happy. I'm kind of worried about the whiplash of CPI. Like, what happens if CPI just like plummets to zero while we're laying off people? That would be called deflation, which, I mean, we like it in Ether, but we don't like it in the dollar. That's what I'm worried about. But still, inflation coming down is good.
Well, we've got a long ways to go. I mean, I think the Fed is hopeful it can get to like the 3 to 4% range, if that's even possible. But the market's like that. Risk on assets up on that news. And so was crypto, although it had a much worse week.
After being down bigly, we had the positive CPI print the lower CPI print, which was positive news. And then the markets, including the crypto markets, did like that. But I mean, FTX collapse, inflation 0.5% lower than expected.
Band-Aid on a bullet wound.
Yeah.
Well, it's not helping us much this week.
No.
Let's just touch on the elections.
Yeah, let's not talk about crypto as much as possible. Let's punt on that conversation.
This has turned into a political podcast. The election results for 2022 Senate. So it's still undecided. This is the U.S. Election, of course. Still undecided election results. Majority is unknown. Apparently, each party needs to win 2 of 3 more races that are still in dispute. Georgia, Arizona, Nevada, and Georgia, the runoff will actually happen in December. So we won't know who controls the Senate until then. Also in the House, Republicans gained 6 seats. Democrats lost 7. That was expected, but actually I think it was kind of expected the Republicans would there'd be some kind of a red wave.
Yes,
yeah.
Which has not materialized, which is just the news that I've heard.
Yes, has not materialized, but I mean, it's kind of still the way it was before, almost. Right. I mean, no real changes. We'll see who controls the Senate past December.
But no change is considered an L for the Republicans. They wanted the red wave. They didn't get it. So the same is a loss for the Republicans. That's what I've heard.
What's interesting about this is crypto had a role to play, a minor role, of course, but if you add up the numbers, according to the Wall Street Journal, $73 million went into the 2022 elections from crypto. I think SBF was like 70 million of that.
Oh, sick. So it was SBF.
A lot.
Great.
He was a lot, which, right,
awesome.
we'll get to a little bit later. What does this mean for crypto is the question, election results. And the answer, I think, David, is what? Probably nothing.
Probably nothing. Yeah.
I mean, I don't think this impacts it. I think the SBF events of this week and FTX meltdown of this week impact crypto in a big way, which we'll talk about. David, it's also layoff season. What headline are we looking at?
Yeah, so Silicon Valley kind of down bad. Meta, the parent company of Facebook, laying off more than 11,000 employees, but they are not the only one. Silicon Valley overall has got a collective layoffs of tens of thousands. So Twitter laid off 3,700 people. I don't know if that was like economics related or Elon Musk related. Definitely Elon Musk related.
Definitely Musk related. And that's 50% of the workforce, right?
Yeah. Oh, wow.
I mean, a combo, but lots of Musk in that.
Stripe laid off 1,000 people. Robinhood laid off 1,000 people. Lyft laid off 700 people. Open Door 550. Netflix 450. It goes on. So collectively, like tens of thousands of people laid off across the tech sector in just the Bay Area, just San Francisco.
That's crazy. I mean, tech just really expanded during COVID over the past 2 years, and now they're completely contracting.
Yep.
It's starting to happen in crypto a little bit too, David.
Yeah, Dapper Labs cutting 22% of staff because NFT markets not great.
Yeah. When's the last time you heard about NBA Top Shot?
Oh, I have not. The headline here says sales volumes for Dapper Labs NBA Top Shot has declined to $2.6 million from $224 million in February of 2021. That is a 99% reduction in revenue.
Wow,
that's bad. That's bad.
Yeah, that's very bad. I mean, that 22% might ratchet up throughout all of this. Mm-hmm. One thing, the last time I think I've heard of NBA Top Shots in the context of people actually starting their crypto journey through NBA Top Shots. Yeah. They no longer do it. Maybe they have some old NFTs from NBA.
Yeah, they got into the harder stuff.
It brought a lot of people into crypto. Right. Brought a lot of people, like I talked to Ethereum and DeFi. Yeah. It's like, when I talk to them, I'm like, oh, so what brought you into crypto? And so you're going to laugh at this. NBA Top Shots. That was the thing. I guess let's try to look for some bright spots here. And the big bright spot, maybe the only this week, I mean, there are some other things that are positive that have gone on, but is Ethereum and the burn rate. I mean, it sucks that this was the week that Ethereum finally went ultrasound, because that was a milestone we had planned to actually celebrate. I mean, the very beginning of when was the Justin Drake episode? Almost like 2 years ago now.
Not almost a year and a half ago. Yeah.
A year and a half ago, where he coined the phrase on Bankless Podcast, "UltraSoundMoney," to describe Ethereum's monetary policy. And this is the week it actually went ultrasound, at least ultrasound since the merge. What are we looking at here, David?
Yeah, this is, of course, the UltraSound.money website. Supply change since the merge, negative 5,400 Ether. Ryan, we have burned about 6,000-ish Ether, maybe 7,000 in the last 2-3 days. 6,000 Ether burnt in the last 3 days, bringing us a negative 5,400 Ether. And like this is the through line. The message here I want to convey is that this is an anti-fragile mechanism. Crypto broke this week. Liquidations happened, prices go down, FTX is insolvent, and all of that volatility creates the Ether burn. And that Ether burn overall makes Ethereum more secure. And so why this is like, if you're anti-ETH maxi, you're like, oh, these people are just like circle jerking about the burn like they always do. Fair, maybe. I am here to say that this is, while there is chaos, at least Ether becomes more anti-fragile because its security gets cheaper as we burn Ether. And so while there's destruction everywhere, at least Ethereum is a little bit more anti-fragile, and that is because of the burn. And we are now, since the merge, negative 0.03% on yearly issuance, and we continue to decline. So this is the one bright shining star that I have that's making me a little bit happy this week, Ryan.
Yeah, I mean, and I think that's a big one in the context of crypto, right? Ethereum performed very well this week. I know you're talking in some of the streams you did earlier this week about this sense that for a lot of people who are in kind of the Ethereum bankless DeFi world and didn't keep their money in kind of the SAM coins, as Kobe calls them, the FTXs of the world, but also the Solanas and some of these other assets. And in FTX, I felt somewhat like unaffected personally by this, right? Of course, crypto prices are down, but we've already seen lower crypto prices, even over the summer, even recently. Right. Yeah. So it was sort of weird to feel like another case of the DeFi Ethereum community. We're not insulated from this because obviously FTX is and SBF
down 15% in prices on the week.
Yeah, massive down, and this is terrible for everyone. Yet not as drastically affected as those that were maybe a little closer to the FTX community, for instance, who can't withdraw their money at this point in time. And certainly our hearts go out to people who've gotten wrecked in that way. But it sort of reminds me of Luna and Terra as well. Right. It's just like I wasn't personally affected by that because. Fortunately, we were able to stay away from that catastrophe completely. There are some things that smelled bad about that.
Right. There's this core of crypto that has a ton of activity. It's Uniswap, it's Aave, it's Maker, it's Compound, it's a few other applications too. And being like a power user of those applications while not having an FTX account, never touching Terra Luna, like if you have been in OG DeFi 1.0 Ethereum applications, you have been in this like tiny little like bubble of protection while it seems the whole rest of the industry has just like blown up around you. That's kind of how it's felt like for me lately.
Yeah, it totally is. Like that scene of like somebody leaving an explosion and there's like, everything behind them is blowing up and there's fire and
mortars going off, bullets whizzing by, and like if you're just tinkering with just Aave, Uniswap, some layer 2s, you're fine.
I do think. Look, I don't want to discount the role luck plays into all of that because look, one of these smart contracts, something could happen in Ethereum at any point in time. What do we always say? If this is risky, it's not for everyone. You could lose everything, and yet I think some of the bankless principles have held up pretty well through the storm that is 2022, right? Even just the idea of going bankless, the idea of making sure that you don't have funds on a public exchange, that you're taking custody of your own keys, right? That thing would have saved people from Voyager, from Celsius, and even from FTX. And that's what we're going to get into next because FTX was the crypto bank that people thought was secure, people thought was safe.
Honestly, I did. I thought it was fine.
I did too. If someone asked me, here's the
Yeah.
test, right? If someone asked you, hey, David, I'm thinking of getting into crypto, Coinbase, FTX, you think one's riskier than the other? Like, I know you have a preference, but is FTX okay? What would you say?
I would say, yeah. I think I've been asked this question before, and I think I've said, yeah, Coinbase, FTX, they're fine.
So have I. It was definitely not fine.
It's
Guys,
not fine.
we're going to be right back with that. The story of SBF and FTX, the final day, the judgment day, I guess, where all of this has come to light. We'll be right back. But before we do, we want to thank the sponsors that made this episode possible.
The Layer 2 era is upon us. Ethereum's Layer 2 ecosystem is growing every day, and we need Layer 2 bridges to be fast and efficient in order to live a Layer 2 life. Across is the fastest, cheapest, and most secure cross-chain bridge. With Across, you don't have to worry about high fees or long wait times. Assets are bridged and available for use almost instantaneously. Across's bridges are powered by UMA's optimistic oracle to securely transfer tokens between Layer 2s and Ethereum. Across is critical ecosystem infrastructure, and Across V2 has just launched. Their new version focuses on higher capital efficiency, Layer 2 to Layer 2 transfers, and a brand new chain with Polygon, all while prioritizing high security and low fees. You can be a part of Across's story by joining their Discord and using Across for all of your Layer 2 transferring needs. So go to across.to to quickly and securely bridge your assets between Ethereum, Optimism, Polygon, Arbitrum, or Boba networks. NEXO is your financial hub for all your crypto needs. NEXO lets you buy crypto instantly with your credit or debit card or via bank transfer. And they also have an awesome advanced trading platform, NEXO Pro, where you can get the best possible prices and trade with 50% discount on fees. And NEXO also lets you earn interest on your crypto in Bitcoin, ETH, or other assets. And they also give you an instant crypto line of credit with as low as 0% APR. And they also give you access to a crypto-backed MasterCard, of course, earning you more crypto when you use it. So, enhance your financial life with NEXO, who ensures all credit lines are over-collateralized with insurance on all custodial assets. NEXO, the right place for your crypto. So click the link in the show notes to join over 5 million users who are getting the most out of their crypto.
The downfall of FTX, Sam Bankman-Fried, the owner of FTX, irresponsible with depositors' money. That is the story. Brought total wreckage to the crypto industry this week. David, could you just give us a quick recap of what happened? I know we have episodes about this already if people want the full story, but what's the 90-second version?
90-second version. SBF rose to fame through this trading fund called Alameda Research, which he is, I believe, like the 90% owner over. Alameda Research just would trade in crypto, do a lot of positions like hedge fund, like hedge trading, all this stuff. Made a ton of money. He was a great trader, and that's where SBF made a lot of his initial money, and that's where Alameda grew a lot of its capital. And then he slowly passed off responsibility to others. Meanwhile, he makes FTX Exchange. Seemingly, Sam Bankman-Fried is a great builder, great operator. FTX, the exchange, rose to fame when in a time where no one really thought it was possible to make another exchange. FTX just made a great product, a good exchange, good services, good financial tools. Everyone seemed to be really impressed by Sam. And Sam, as a figure, grew in prominence for these two massive successes. He slowly passed off all of his responsibility to Alameda Research to somebody else, a team of people, and totally focused and doubled down on the FTX empire, which grew in a crazy fashion. There was always this loose association between Alameda Research and FTX, where Alameda would market make on the FTX exchange, making FTX extremely liquid and a great place to just have liquidity beyond just the basics. And so there were the symbiosis between Alameda Research and FTX helped FTX rise in fame. We saw FTX buy naming rights for the Miami Heat Stadium. We saw FTX sign deals with like Tom Brady, and just like a huge success story out of 2021, and raise billions of dollars in capital. Then a report out of CoinDesk from a leaked financial document about Alameda's balance sheet reported that a lot of Alameda's balance sheet, basically all of their assets were the FTX exchange's token FTT, and it had a ton of FTT as collateral backing a bunch of loans. And so Alameda had loans that were backed by FTT, it was in a precarious position, and that alerted CZ. And now Binance was an early investor in FTX.
CZ, of course, is the co-founder of Binance, a different kind of exchange empire that he's built, and a rival
Much
to
bigger
SBF.
exchange empire.
Yes.
Yeah. And so Binance invested in FTX equity, and as a result, they had $2.1 billion of FTT. And CZ says, due to recent revelations that have come to light, we have decided to liquidate any remaining FTT on our books. This is largely a result of the precarious nature of FTT because it was such strong. It was a huge position of Alameda's books. It was basically all of Alameda's assets were basically FTT tokens. People are like, how did Alameda have such? I thought they were trading like Bitcoin and Ether. Why are so much of their assets all denominated in FTT? That was a big question mark. And so CZ was like, okay, that's not good. We're going to start selling our FTT because of this precarious nature, which starts to first plummet the price of FTT, scaring Alameda, but then also trigger fears that there is some sort of contagion between Alameda and FTX, because people always knew that there was a link between these two firms from SBF, and these were loosely correlated somehow. And people were worried that somehow there was going to be a run on the bank on FTX because of the shared asset, the shared balance books between FTX and Alameda, which was hypothesized. That turned out, Ryan, to be true. That there was commingling of assets between Alameda and FTX. And so moving forward in this story, the next morning, after CZ said he's going to dump all this FTT, FTX appeared to stop processing user withdrawals. So they ran out of money. And that's basically where it was revealed that FTX was insolvent. How insolvent was FTX? We didn't really know at the time. We still don't know. But we initially hypothesized something like $1 to $5 billion of insolvency, which is already a big hole. It's now coming to be somewhere around in the $8 to $10 billion that is missing from the FTX balance sheet, which is largely coming out of user deposits.
So what we're talking about is we've got somebody who operated an exchange and a hedge fund, and in order to bolster the books of the hedge fund, he used depositors' money in the exchange to basically do that. He gambled away depositors' money in the exchange. I mean, that would be a super simple explanation of what happened. And so now there's
but also it's important to know that Alameda probably was wrecked along with everyone else during the Three Arrows Capital contagion back in May.
Yes.
The reason why they weren't is because they had this relationship with FTX, and so they were able to not be wrecked because FTX sent them a bailout, a secret under the table bailout.
Well, it was a bailout of backed by depositors' funds.
Whatever money that they had, including depositors' funds. Yeah.
Absolutely insane. I mean, Voorhees said it on our podcast, is like, you go to a bank or you go to exchange, right? You deposit your funds. It's not theirs to go play with and gamble with and use in their side hedge fund. It's supposed to stay there.
Right.
So that when the user comes back and says, okay, now I'd like to withdraw my funds, those funds can just be withdrawn. And so the balance sheet should be very simple: deposits and withdrawals. Deposits and withdrawals. All user funds are deposited and then withdrawn. And that completely broke. And so I guess, one of my takes about all of this is because we're still seeing what the fallout might be in crypto. And it's absolutely massive. I think this is the biggest single event that's occurred in crypto, maybe since Mt. Gox. In some ways, it's sort of exceeded this because this is somebody who is supposed to be trusted in Wall Street. Sort of somebody.
He was lobbying in DC. He represented us.
He had the ears of senators and folks in Congress. He represented us as kind of like the cleaned up version of crypto without all of the crypto anarchists and the shenanigans. Yes. I mean, he kind of didn't for the different mystique, but yes, he would wear a tie. In fact, we've seen him in front of Congress, kind of like talking about crypto. Anyway, all of this just really sunk in with me last night. And this was yesterday evening, and I was just thinking, David, like how surreal the last 48 hours had been as this story has developed, because like I don't know how to overstate how big a figure Sam was. Like crypto trading god, exchange god, like rock of I don't know how to last and how to persist and how to do things right in crypto. It just the exchange he built was just a phenomenal product. I mean,
Yeah,
except for,
which is sad because that product's gone now.
and what's crazy to me is as of yesterday, it was 11 days ago that we hosted this debate between
SBF and Eric
Sam
Voorhees, yeah.
Bankman-Fried and Eric Voorhees. And you remember that? This is a screenshot from that debate. And Sam was lecturing us and talking to us about the merits of crypto regulation. We were having this debate about crypto values. And in the background, David, this guy had maybe an $8 to $10 billion hole that was developing on his balance sheet. He was talking about crypto values and discussing the merits and costs of like DeFi, talking about ways to regulate DeFi front ends. Meanwhile, he's like playing with depositor money. He's gambling it away. He's been, it's got to be the most irresponsible figure that's done the most damage to crypto that I've ever seen, that this industry has ever seen. And this was 11 days ago. We were having a conversation with this guy. I don't understand. Like, it's even hard for me to believe that we had this conversation. Like, you were there, right? Like, this happened.
He was so frazzled. He was more frazzled and inarticulate than I had ever seen him before. Like, I've seen him give his talks at Capitol Hill, and he's like decently articulate. That call, he was a different person. And it's just interesting that 11 days later, we discover an $8 billion, $10 billion hole in FTX.
Well, let's talk about what's developed. And this is as of
So yeah, that was all
Thursday
the
morning.
recap.
Yeah, that was just the recap.
Yeah.
This is the apology that's just come out. This is a tweet thread from SBF. Do you want to read a few of these?
Yeah, SBF goes, "I'm sorry. That's the biggest thing. I effed up and should have done better. I also should have been communicating more very recently. Transparency, my hands were tied during the duration of the possible Binance deal. I wasn't particularly allowed to say much publicly. But of course, it's on me that we ended up there in the first place. So here is an update on where things are. FTX International currently has a total market value of assets and collateral higher than client deposits, moves with prices. But that's different from liquidity for delivery. As you can tell from the stated withdrawals, the liquidity varies widely from very to very little."
What does that mean here? He's saying that
He's saying that the value of the assets and collateral that FTX has is higher than what their client deposits are.
based on what? Like, what's the value of these assets if you actually
This
can't sell
tweet,
them and no one will buy them?
Yeah, but he's saying that that's different from liquidity. So they have the assets, but they don't have them liquid.
They have some paper value, is what he's saying.
Paper value, yeah. SPF continues and goes, "The story here is one I'm still fleshing out every detail of, but at a very high level, I effed up twice. The first time, a poor internal labeling of bank-related accounts meant that I was substantially off from my sense of users' margin. I thought it was way lower. My sense before, leverage, 0. US liquidity ready to deliver, 24 times the average daily withdrawal. Actual, 1.7 times leverage, and liquidity, 80% of Sunday's worth of withdrawals. But of course, when it rains, it pours. We saw roughly $5 billion of withdrawals on Sunday, the largest by a huge margin. That was the thing that CZ triggered."
He basically precipitated a bank run.
Yes.
With some of these things, and
Right.
and that's what he's talking about. The $5 billion of withdrawals on just one day alone.
You're right. And so SPF says, "And I was off twice, which tells me a lot of things, both specifically and generally, that I was shit at. And a third time, I'm not communicating enough. Just a reminder, a third time, I'm not communicating enough. I should have said more. I'm sorry. I was slammed with things to do and didn't give you updates at all."
David, why would a bank run actually matter if Coinbase got a bank run and everyone withdrew all of their ETH and all of their Bitcoin, right? Like, why would that be a problem? Because all of the ETH and all of the Bitcoin is there. It's not a fractional reserve system. Like, it shouldn't be a problem.
It shouldn't be a fractional reserve system. It was a fractional reserve
Very
system.
fractional.
Yeah. And like the whole like line, his whole tweet, like mislabeled bank accounts.
Clerical error.
That caused an $8 billion hole. Like, that's what did it?
Yeah.
I don't think so. Anyways, so he finishes off. Anyways, my number one priority by far is doing right by users, and I'm going to do everything I can to do that, to take responsibility and do what I can. So right now we're spending the week doing everything we can to raise liquidity. I can't make any promises around that, but I'm going to try and give everything I have to make that work. There are a number of players we are in talks with, letters of intent, term sheets, etc. We'll see how that ends up. Every penny of that and the existing collateral will go straight to users unless or until we've done right by them. After that, investors, old and new, and employees who have fought for what's right for their career and who weren't responsible for any of the fuck ups. Because at the end of the day, I was CEO, which means I was responsible for making sure that things went well. I ultimately have been on top of everything. I clearly failed in that. I'm sorry. So what does this mean going forward? I'm not sure. He loves to say I'm not sure. First, Alameda Research is winding down. They are probably liquidated. They aren't doing any of the weird things that I see on Twitter, and nothing large anymore. One way or another, soon they won't be trading on FTX at all. Second, in any scenario in which FTX continues operating, its first priority will be radical transparency. Transparency probably always should have been giving as close to on-chain transparency as I can so that people know exactly what is happening on it.
Kind of like DeFi?
Kind of like DeFi.
The transparency of DeFi?
Yeah. Yeah. I mean, I feel like that's a good
he goes on,
conclusion
but
of this thread.
there was one thing he said. A lot of sorries, of course, with this tweet number 20. At some point, I might have more to say about a particular sparring partner, so to speak. He's talking about CZ. But glass houses. So for now, all I'll say is, well played, you won. Heavily implying that CZ was his downfall. And of course, there was that CZ tweet on Sunday that precipitated part of this. But if he wasn't running a fractional reserve system where he was lending out depositors money, it wouldn't have been a problem, right? So CZ kind of poked some holes in the structure, and the whole rotting thing fell down. Right. And it's his fault that it was a rotting structure to begin with, and that a few little pokes would...
If a few tweets can collapse your empire...
You might have a problem.
You might have a problem.
By the way, did you see this? This is a tweet from Kobe that's kind of related to SBF's thread. But there is some similarities in the way
Chef Nomi and Sam Bankman-Fried,
and Chef Nomi, of course, was Sushi Swap founder
the OG Sushi Swap founder who did the OG Sushi Swap rug, which kind of gave the Sushi Swap curse in the first place. And after rugging the treasury out of Sushi Swap, Chef Nomi tweeted to everyone, "I fucked up and I am sorry." Which is kind of the same language.
Look at this.
Which is what Kobe's poking at. Yeah. I'm sorry, that's the biggest thing. I fucked up and should have done better. It's
interesting. Interesting anyway. There was some ties.
Well, that wasn't the only association between Sushi Swap and
all.
Sam Bankman-Fried. That was, there's been more, relations.
I mean, at this point, David, I would not be surprised. This would not surprise me in the least.
We saw Do Kwon behind those algo stable coins as an anon, and then start.
Rick Sanchez, he telegrammed to me and told me about Basis Cash was his original Ethereum algo stable coin. It would not surprise me in the least. So I don't know. What do you make of that? Was it an apology? Is it just a nothing burger? Like, what is he doing here? What is he trying to accomplish?
I don't know, man. I don't know.
The big question, I think, is where he's going to find the $8 to $10 billion to fill that hole of depositors' money. Because
right. So right now, FTX is worth $1. It is on the market to anyone who wants to buy it for $1. If you buy FTX for $1, you are taking on somewhere between $8-ish billion of liabilities.
No,
you get the FTX empire, which comes with the low price of $8 billion of liabilities.
Absolutely brutal. And of course, CZ looked at this apparently and then completely walked away from it.
Hell no.
Yeah.
It took him about 24 hours to reject that deal.
This has also cost SBF from a net worth perspective, of course, like at his peak. I don't know, he was in the 20s of billions, something like this. I've heard close to 30 billion. But he lost an estimated $15 billion, which at the time is nearly 94% of his total wealth. I bet that's even more now. Like, I mean, who knows where he's going to end up.
He could be at zero,
Definitely cost him a lot. What is this tweet, David?
Yeah, so this is okay. So at this point, we are on the frontier of the story. So things are now developing. But Tether has frozen FTX's USD address. Tether or FTX, all the Tether that FTX has, about $46 million of it, is now frozen. You could only imagine that regulators came knocking on Tether's door, said, "Hey, go freeze FTX's Tether supply," and Tether was like, "Sure, 100%."
Happy to do that.
Yeah, happy to.
And of course, I mean, USDT is just kind of an IOU. It's not like actually money. So, I mean, they can do this sort of thing whenever they want to. Hopefully there's assets backing this money, and the money wasn't really lost. Gary Gensler has entered the picture a little bit here.
Right.
You could imagine he'd have some things to say. So he went on CNBC earlier this morning at our time of recording, and what did he say?
He said that Gary, was hoodwinked by FTX after meeting with them in March. And says he is now building the evidence, building the facts, which often takes time, as to an answer as to what he is doing with FTX.
Gary was hoodwinked. A lot of us were, to be fair.
Yes.
But Gary in particular.
Right.
This is another follow-up.
It's his job to not be.
It's true.
So Gary also tweeted out, "I'll be joining Squawk CNBC at 8 a.m. Eastern," so that was this morning, "to discuss recent developments in the crypto markets." And Collins Belton, he's a lawyer, actually interviewed about the Tornado Cash stuff. He replies to this tweet out of Gary and says, "Ideally, you'll spend some time to explain how, once again, the Commission's enforcement priorities focused on entities trying to deploy technology to prevent these market failures and asymmetries, while you are meeting with the perpetrators or overlooking their malfeasance." And so this is just a tweet of a picture of Gary's Tuesday, March 29th schedule, which was a meeting with like 8 different FTX representatives, executives. So it's interesting that Gary Gensler and FTX had met, and
but
do
you see this move? Gensler is definitely distancing himself from SBF and FTX, and a lot of politicians who receive political donations and have been in conversation with SBF are doing the same thing. You've got to imagine. I mean, SBF is just like toxic at this point. It's crypto's biggest. It's not a Ponzi scheme, but it's a scheme of that type, right? And so no one wants to be associated in DC with that. This is part of why this is going to cost crypto so much, is we've taken a major black eye here and lost a whole lot of legitimacy from the serious adults, I think. You know, the regulators, DC, Wall Street, institutions, that sort of thing.
Ryan, this is developing. We have an email with Tom Emmer's staff to try and get him on the show to talk to more about this, but he retweets Gary Gensler's tweet about joining Squawk CNBC. And Representative Tom Emmer says, "Interesting. Gary Gensler runs to the media while reports to my office allege he was helping SBF and FTX work on legal loopholes to obtain a regulatory monopoly. We are looking into this." That is all we know at this time. It was the fear of the crypto industry that SBF's work in DC was to specifically produce regulatory arbitrage for FTX by closing the door behind them after making sure that whatever they were doing was legal.
Even closing the door on all of DeFi.
Right, on DeFi, right. And so Tom Emmer says that they had reports that Gary Gensler and SBF were working to create legal loopholes to create a regulatory monopoly. I hope we can get Tom Emmer on the show to talk about this soon. That is interesting.
More developing too. Of course, Elizabeth Warren weighed in on this and said, "The collapse of one of the largest crypto platforms shows how much of the industry appears to be smoke and mirrors. We need more aggressive enforcement, and I'll keep pushing the SEC to enforce the law to protect consumers and financial stability." So Elizabeth
At
Warren,
face value, I love that tweet. I don't have any problem with that tweet. The collapse of one of the largest crypto platforms show how much of the industry appears to be smoke and mirrors. That's what FTX was. It was smoke and mirrors.
Yes.
And so I do not have a problem with that. We need to be more aggressive enforcement and keep pushing the SEC to enforce laws to protect. If this means that we are forcing the SEC to do more, great. Fine. I don't have a problem with this.
To do more that's helpful. To do more that prevents the actual problem. Like it's definitely a problem if Gary Gensler is kind of setting up a monopoly for crypto bankers like SBF and using regulatory power to do that. Brian Armstrong's response to Elizabeth Warren right under this tweet I thought was good too. He says, FTX was an offshore exchange, not even regulated by the SEC, Elizabeth. The problem is that the SEC failed to create regulatory clarity here in the US, so many American investors and 95% of trading activity went offshore. Punishing US companies for making this, for this makes no sense. And that is actually the facts of the case.
Yeah.
It wasn't FTX.US, which was more regulated in the US.
Which is fine. If you have assets in FTX US, you are fine.
So if you're an American and you're using FTX US, you're totally fine.
Yeah.
All deposits are there, withdrawals are enabled. And that's like 1% of all of FTX's
It's the
assets.
minority of the business because
It was pushed out.
It was pushed out, but also because they could actually take customer deposits and go gamble them if they were not inside of the United States.
Right. So Brian's making the case, hey, you have to work to make it easier for retail to have safe access to these products. And you're not doing that with the current regulatory regime. David, there's also some talk of maybe some FTX transactions appear to be processing. So, of course, no one can get their funds out of FTX. That's locked. That was a one-way ticket. They no longer exist. They're not there. But we're looking on chain, and some things do seem to be withdrawing. What's this?
Yeah, so this is Steven out of The Block, who's done some great research and snooping, on-chain snooping, but just noticed that funds were coming out of FTX and going into various accounts. No one knows how or why, but that is what we are able to see on-chain. This is Larry Cermak says, the withdrawals from FTX seem to be really weird. Some of them actually go to the Binance deposit addresses, and some of them appear to be fresh wallets, which could indicate a consolidation. Pretty large, $100,000 processing as well. What all of this is, I don't think we know.
So I think one of the biggest pieces of this story is a lot of people trusted Sam, and a lot of people were wrong about Sam. A lot of people were duped. I think myself and you included, not fully trusting Sam, not ever trusting fully a centralized exchange, but to think that FTX could just evaporate, that they were like gambling away their depositors' money, that was unthinkable to me. This is a tweet thread from some of the people that were sticking up for FTX and SBF in the beginning. And there was a lot of this chatter as the rumors persisted that, hey, maybe something's going on at FTX and Alameda. You should look into it. This is somebody, an account, austerity sucks. I don't delete tweets, so I'm not going to delete this. Even as people laugh and troll and mock me, yes, I was wrong. The tweet stays up. Kudos for keeping the tweet up. But on November 6th, this was the tweet that the poster posted. Imagine thinking Alameda is the next 3 Arrows Capital. A side effect of the increased counterparty due diligence process, he goes on. Anyway, it was this conversation like, they're not going to go 3 Arrows Capital. Everything's fine. It's Alameda.
They're fine. They're so responsible.
Yeah. I mean, look at Sam. He's like the pinnacle of responsible exchange operator. He's kind of a younger, faster moving Brian Armstrong. This is actually from some of the employees that respond to this thread. And this is an employee named Zane Tackett. Many people internally and externally were fooled. I'll leave my tweets up as well and take all the heat I deserve for defending something I didn't have all the details on. Somebody says, I can't believe this is real, Zane. You're not the only one, man. But in a state of complete shock, he goes on to say, I don't want to speak for others. Remember, this is an employee of FTX. I don't want to speak for others, but just complete disbelief and feelings of betrayal. What bothers me the most is that I went out and defended FTX and Sam in public, said the news was FUD, we're fine, when they knew that wasn't true, and they didn't have the decency to warn me. Employees as well, feeling betrayed by this. What do we do about this, David? I mean, I guess I have kind of two questions for you. It's like, first, how long do you think this is going to take to recover? I mean, this is clearly a wound in the crypto industry. And then I want to ask you where we go from here. But time to recovery. How long is it going to take this one to heal? I mean, we've had wounds in the past. We've definitely had damage before. This isn't the first time. But how about this? How long will it take for us to get out of this one?
How long is it going to take to forget the name FTX?
Oh, I don't think we're ever going to forget the name FTX.
For normies to forget the name FTX.
I think it's going to be a Mt. Gox. But yes, I guess Mt. Gox is kind of faded, except for the crypto historians who bring it up.
Right. I mean, yeah. We're going to be living with this for a while.
I think my take is years, David.
Years.
Yeah, I think it's years. And I'll say it again. I don't think any single individual has ever done more damage to crypto than SBF. I mean, it's things like as far as total crypto market cap, we lost more in Mt. Gox than we did in FTX, okay? But there's something different about this. And the difference is Mt. Gox was not taken seriously by anybody.
Right.
Like crypto was in its
infancy, and the token distribution of Bitcoin at the time was still so much more more concentrated. Mt. Gox had like 6.5% of all Bitcoins.
It was a joke of an exchange.
It was Magic the Gathering exchange. That's the name.
Yes.
And the Mark Karpellis was Mark Karpellis. He was kind of like this neckbeard guy. He wasn't going to Congress to testify for regulation, rubbing shoulders with Gary Gensler.
100%. So the thing that will take a long time to recover, and I'm not necessarily saying actually markets, David. I don't necessarily think it'll take 2 to 3 years for markets to recover. I'm just talking about the black state. Like I'm just talking about the legitimacy recovery.
Right.
The Ontario Pension Fund was an investor in FTX, one of the first pension funds to do things in crypto, right? When's the next time a pension fund is going to do this?
Right.
When's the next time a senator is going to take a meeting with somebody in the crypto industry?
Right.
They're distancing themselves from it.
Right.
How much?
We have like just such a smaller foundation to stand on.
Yeah.
We have made like the work for people like Brian Armstrong and Jake Chervinsky and people who we need to have trust. We have made their jobs 10 times harder as a result of this.
Totally, dude. I can't. I feel like we're coming in the night after a crazy house party, right? And like the kids have been super irresponsible. This is Ryan the dad, I guess, coming out. The kids have been super irresponsible. Like there's furniture broken, computers stolen. Like,
dude, there are kids who drove home drunk and crashed and died.
That's what it is. You know, it's even worse than that. And the cops are, showing up, and then we have to pick up the pieces in our community for like, and why? And like, why? Why did this happen? I mean, FTX was a fantastic exchange.
It was a good product.
Like it worked. You had
it was good.
You had a product market fit, but you had to run a hedge fund.
You had to run it as a fucking Ponzi scheme, dude.
So where do we go from here is the next question. Like how do we actually start recovering? I mean, here's the thing. Here's the story about 2022 is it's just a story of this keeps happening. Yeah. And if it was just one thing, if it was just FTX, that would be one thing. But no, we had Three Arrows Capital, but I mean, before that we had Do Kwon, totally recognize Celsius. And then I saw you tweet this out, by the way. Okay, answer me this. Three Arrows Capital liquidated, Alameda liquidated, FTX insolvent, then who made the money and who shows up? Richard freaking Hart goes, hi there, I made all the money. Okay? This dude is a scammer. He runs he's got a coin called Pulse. He's preying on people, making tons of money, and he's actively scamming. And I feel like our industry is still full of people like this. For every Vitalik, for every Brian Armstrong, for every Hayden Adams or Stani from Aave, we have like 100 Richard Harts. And that just sucks. So what do we do about this? How do we move forward?
I got nothing, man.
How are you feeling about this, David?
It's like we have these like super awesome foundations, and just like they just keep on enabling the worst.
Do you think that
like it's hard to justify what the hell we're doing here, man?
Do you think this is a layer 0 problem? Is it a problem with kind of the social layer?
It's like if we'll make these super cool applications and then scammers just can leverage them better. It's like we're running out of ways to explain it to normies.
So when someone asks you about crypto after this week, do you have a different answer for them about why it's important?
I don't even want to talk about it.
I mean, I think you're like reflecting how a lot of people feel right now. We've really just been brutalized by this. I guess I'll give my take on where we go from here. And let me know if you have any other thoughts, David. I know this one hit you really hard. Not that you had any funds at risk, right?
Mm-mm.
It's just what? It's just like the impact, the social impact. It's just the, yeah, what is it? Why is this hitting you so hard, do you think, versus the other ones?
It just gets worse the more that it happens. It's just like, I don't know, man.
One answer I think for us is going back. I think in our live stream last night, Kobe mentioned this too, of like, you know, where do we go after this? And his answer was, I don't know, maybe somewhere like 2016, 2017, something like this. And I really feel like we need to take a step back and reevaluate kind of why we're here as an industry. You know that phrase that from the earliest Bankless podcasts, we were talking about like protocols, not people. That's where we put our trust in. I feel like crypto believed that at one point in time, and a segment of crypto still does, but we lost a whole bunch of that with the fast money and the demagogues and the Richard Harts. Like, I feel like we lost our way. And I don't mean everybody. There's still fantastic people building incredible things. But I mean enough that it made a difference. Enough that it enabled the FTXs of the world and the Alamedas and the 3 Hours Capitals and the Terras of the world. And I think what we need to do is go back and rediscover the principles and the reasons this industry exists. It's all about, it's code, not kings. That's what we're trusting in. It's protocols, not people. And this is about going bankless, not trusting another banker. Maybe I'll throw out some hope for you, David, because it feels like you're pretty down on this, but like DeFi weathered this quite well. Ethereum weathered this quite well. I mean, the problem that we saw was with a centralized exchange, is with another bank. And one of the reasons I think we started this podcast and this movement, which Bankless listener, I'm glad that you're joining us on and you've been on with us, is to make sure that crypto didn't replace the old system with a new system of bankers. It's no good if we just swap out Jamie Dimon for SBF, right? I mean, what do we gain? What do we benefit from? And I felt like over the past 2 years or so, particularly in this bull market, we were starting to veer towards that, where the bankers were getting more and more control. We forgot about first principles of like why we're here, and we put trust in the wrong people. And I'm hopeful, David, that this is actually like another wake-up call, another cleansing process for us, another reason to go back to those roots. And ultimately, I think we'll end up stronger on the other side. It doesn't feel like that in a week like this, but I'll just remind people, Ethereum kept going, DeFi kept going. We had the transparency. We have the crypto economic protocols. We just didn't use them. And the system broke where they weren't in use. That's where I
remember that there's one part out of our interview with Polenia, and they said, I'm so bullish on human trust that we don't actually need protocols in the future. Like, I think that's what's missing. Is like, I want to be able to trust SBF. I want to be able to hand him my private keys and then get them back later with all the funds intact. I feel like I can do that to Brian Armstrong. But like at this point, like, well, I don't even know, man. Like, who the hell's left?
This sounds like it's a deeper thing. It's like a faith in humanity kind of, or faith in the industry, faith in the people in the industry, faith in the layer zero.
Yeah. Yeah.
That's the struggle here.
It's because like, who are the biggest characters of the last year? Like, we have these cult of personalities. We have like Do Kwon, and like Alex Mashinsky tried to make this about him, and like Suzu and 3 Hours Capital and Danny Sesta, and then SBF. Like everyone who's super loud grows this massive cult of personality around them, and they all F it up. Every single one of them. And like, that's why I just respect the hell out of Brian Armstrong so much, just because like it's not about him. It's not about him, and he doesn't want it to be about him. It's one of those, it's where there's that line of just like, the people that you want to be in power don't want power. And the people that want power, you don't want them to be in power.
Yeah. I will say, David, a lot of the people that we've met in crypto, though, over the past 3 years, 4 years, they are here for the right reasons. Which point I would quit this industry is if Vitalik Buterin screwed us over. At that point, I'd be like, faith in humanity lost.
Yeah.
But there's enough Vitaliks, there's enough Bryans, there's enough people on the bankless journey that are doing this for the right reasons and who care about these core founding values. And I actually think we're just going to get back to rediscovering these things and hopefully build this thing back stronger.
Why does it take a pain to learn? Like, we're the most dumb monkeys of all time, dude.
I don't know.
Like, we're supposed to be able to learn without having to feel pain. Pain is like the last resort. Like, we're supposed to be smart.
I don't know. Were you smart the first cycle? How smart were you?
I bought a bunch of ICOs.
2017. How smart was David? Was he? What? Why was he
now
here?
I'm thinking a lot smarter than I was originally letting on.
You think you were smarter than
all the other dumb monkeys in this industry that keep giving bankers their money? Yeah.
I mean, I think it's just every generation has to learn these things. Yeah, like I said, I mean, the systems that used our crypto economic protocols that used DeFi held up in all of this.
Yeah.
And the flaws in the system were where we had trusted intermediaries. And isn't that the freaking point of crypto, to remove the trusted intermediaries?
Right, but we're not even doing that. Like, a few people are using that stuff.
More though. I mean, every year it's a little bit more. And yeah, I think we'll get out of this. Guys, we got more to cover. Some Ethereum roadmap stuff. We're going to talk about the seizure of $3.4 billion from some dude's closet in Gainesville, Georgia, which is crazy. But before we do, we want to thank the sponsors that made this episode possible.
In all of my years in crypto, I've never been hacked, scammed, or lost money to a thief, and a lot of that credit goes to my Ledger hardware wallet. The Ledger Nano X and the Ledger Nano S Plus hardware wallets allow users like you and me to secure and manage all of our crypto assets and our NFTs, all with the security of storing users' private keys offline and out of reach from hackers. The Ledger Nano X is the perfect hardware wallet for managing your crypto and NFTs on the go because it connects to your phone with Bluetooth and has a nice big screen for easy transaction readings. Ledger has also upgraded the iconic Ledger Nano S and made the new Ledger Nano S device more DeFi and NFT friendly, making it the perfect hardware wallet for beginners. Ledger has truly maximized for both ease of use and security. So discover which Ledger device is best suited for your journey by going and visiting shop.ledger.com. If you've been listening to Bankless, you know that we're fans of the modular blockchain thesis. The idea that blockchains will separate execution from data availability and consensus, allowing all three to become the best versions of themselves. And Fuel has built the fastest modular execution layer in the industry. By supporting parallel transaction execution, Fuel unlocks significantly faster throughput for the Web3 world. Fuel also goes beyond the limitations of the EVM with its own Fuel VM, which is more efficient and optimized, opening up the design space for developers. And lastly, Fuel brings a powerful developer experience with its own domain-specific language, Sway, and a supportive toolchain called Fork. With Fuel, you can have the benefits of smart contract languages like Solidity while adopting the improvements made by the Rust tooling ecosystem, letting the Fuel development environment go beyond the limitations of the EVM. If you want to learn more, there's a link in the show notes to see how you can get involved with the Fuel network.
All right, guys, we're back. David's feeling better because we are looking at the Ethereum Roadmap. The newest version, a new Vitalik Buterin roadmap just dropped. This is Ethereum. It's got all of the stages, David. We're looking at the merge, the surge, the scourge, the verge, the purge, and the splurge.
And if you were paying attention, you would have noticed there's a new urge. The scourge is new. So we'll walk through the scourge, which is to ensure reliable, incredibly neutral transaction inclusion and avoid centralization amongst MEV risk. So this has to do with all of the increased emphasis on censorship resistance of Ethereum. So he's carved out this new urge and put some things that fit under this category, things that already existed, but now we have an urge to explain it. And also, Vitalik Buterin would like you to know that all of these things are happening in parallel. This is not a serial order of operations starting from the merge and ending at the splurge. All of these things are being worked on in parallel from left to right. And this is the updated state of the Ethereum roadmap. All these
Anything
urges.
else new here, David? I mean, this is everything that, are there any other major features here? Anything unexpected?
Nope, everything else is the same. Like he's just like moved forward the progress bars. I guess he's added some new things here, but it's more or less what we expect. Is they're just updated now.
If you want, I think the most recent thing that we've heard on from Vitalik on the roadmap, check out our previous episode. We did that 6 weeks ago, maybe it's a little longer, with Vitalik, where he goes through some of the roadmap, and I think it's reflected here too. David, we got OpenSea. They are creating new tools to help artists collect royalties on chain. What does this mean?
Yeah, so there's been this royalty problem in the NFT world where you have royalties baked into tokens, but they're actually not enforced at the smart contract layer level, which actually makes sense, right? Because if you own an NFT and you want to transfer it to another wallet address, just like go from wallet A to wallet B, you just want to send it to someone yourself, you want to gift it, you don't have to pay the royalty because it's not a sale. So where do the royalties actually come in? Well, they come in at the exchange level, but the exchanges have to opt into royalties in order for royalties to be paid.
That kind of sucks.
It does kind of suck. It makes royalties an opt-in thing, which kind of ruins the point of a royalty. And so OpenSea, Devin Finzer and OpenSea said that we are making a better system. So they have made a new little widget to help enforce royalties for tokens that have royalties. And so I think the way that this works is that if you want to add this little widget to your NFT, it makes that NFT only saleable on exchanges that opt into this little widget.
So you can write that in code, though.
You can write that in code, yeah. Mm-hmm. And so it's a step in the right direction to making sure that we keep royalties into the tokens, which is one of the reasons why NFTs have made the inroads into the artist communities in the first place.
Yeah,
so
you can't just be like, I choose not to pay royalties.
Right.
That shouldn't be a decision available to you. William Peaster had a whole article on this about the future of NFT royalties in Metaversal. If you're not subscribed to Metaversal, by the way, that's a bankless sub-newsletter. If you're into the NFT space, Peaster's
it's by
got
far
it
the
for you.
most useful NFT newsletter that exists.
That's Metaversal. Metaversal.banklesshq.com, of course. SuperRare doing some NFT stuff too. They're pulling a Kevin Rose here, it feels like, and creating like a curator pass for art.
Yeah, it's basically like a pass that gives you privileged access to the SuperRare ecosystem. So a monthly airdrop from a legendary artist, they claim. 3 times opportunities a month to win a one-of-one unique NFT, an exclusive pass holder community access, and additional benefits to be announced. I think it's just going to be like the membership passport towards SuperRare. I think this is a business model that many people are going to be experimenting with.
Oh, big fan of passports, David. How about you?
Oh, I love NFT passports, my man.
Also experiments.
Also experiments.
This is crazy.
Communities.
Did you catch this story, by the way? It was just before all the FTX news broke, but the U.S. apparently seized $3.36 billion worth of Bitcoin. They did this a year ago, but they just announced it earlier this week. And this is from a guy who stole 50K of Bitcoin from the Silk Road. So, still Silk Road, OG, kind of a drug for crypto
Simpler times.
marketplace.
Yeah.
10 years ago, somebody stole $50K worth of Bitcoin. And this guy was just hanging out at his house in Gainesville, Georgia. I guess the Fed knocked on his door one day.
It's Gainesville.
Yeah. And, was like, hey, we know you have something. And I'm not sure what the process went like from there. Apparently he voluntary in quotes kind of gave up the crypto to him. I'm sure there's some plea bargains involved. I'm sure there's a lot involved here. But yeah, can you imagine sitting in Georgia with $3 billion in your basement somewhere worth of Bitcoin?
Not in the basement. Do you know where he hid it, Ryan?
No.
So the quote from the GainesvilleTime.com, I'm reading it right now. It was a small computer in a underground floor safe that was submerged under blankets in a popcorn tin in the bathroom closet or something.
Oh my God. Well, sir, he was bankless though, wasn't he? I mean, didn't have to worry about FTX, just had to worry about this problem of what
Theft.
you do
It's
on
still,
chain.
yeah, if you own your own assets, you can still be in trouble for stealing them.
And just a reminder, on-chain crime is also forever. It is also immutable.
Yeah.
So what happened was the feds, the authorities, upgraded their on-chain analytics tools and were somehow able to find this individual and go request those funds be returned. I'm not sure what happens to it from there, David. That'd be an interesting story. Did the authorities just auction this off?
They will. I think that's how they did it last time, and people really, really liked it. What did they auction it from? I can't remember. I think it was the Silk Road. It was Ross Ulbricht's bitcoins from the Silk Road.
Adam Draper bought a bunch, or something.
And Adam Draper bought a bunch, and everyone wanted them because they assumed that if the government is selling them the bitcoins, that they are government approved bitcoins, and so they went for a premium, and Adam Draper paid that premium. I don't think that premium has been justified, but
but he paid a lot less for them. I don't know, in the hundreds of dollars per Bitcoin.
Oh yeah.
Yeah, it's
he
definitely
paid a premium
justified.
at the time.
I see. So pretty crazy. And by the way, that's the second largest financial seizure in history. Happened to be with Bitcoin. Happened to be with crypto. Mm-hmm. The other thing that's happening, given what we were just talking about, you might be excited about this, David.
Yeah, I am.
The SEC issued a subpoena to influencers promoting Hex, Pulse Chain, and Pulse X. These are all
Richard
shady
Hart projects,
scam, Ponzi type projects promoted by Richard Hart.
And a collection of influencers. We are not going after Richard Hart, sadly. Where does Richard Hart live? Can we go get him?
I'm sure they're going after. I'm sure they can't just go after the influencers and not Richard Hart, right?
Yes. Yeah. I'm Googling this. Where does Richard Hart
Can we just say this is what the SEC should be doing? Thank you.
Yes.
Thank you. Thank you, SEC. This is what we want. This is what crypto has always asked for, is your help in identifying and rooting out and bringing the scammers to justice. Don't stop legitimate entrepreneurs and real businesses, but give clarity to our industry. Help Brian Armstrong with Coinbase so that 95% of trading activity doesn't happen outside of the US, and then also help us collect some of the scammers. There's a lot of work to do in this space. As you just said, crypto still has a lot of scammers, shady individuals to go chase after. So you can keep yourself busy there. And that's what's happening with some of these influencers.
I don't know. He's from America. I don't know where he lives. This article, there's nothing. Yeah, I can't imagine. Well, it's not in the U.S.
Not in Gainesville, Georgia, huh?
Not in Gainesville, yeah. All right, this is a tweet out of LBRY.com. It says, "We lost. Sorry, everyone." What is this about? Well, LBRY was going up against the SEC about a securities offering. So the SEC sued them for issuing securities. They say that they violated securities laws by selling the native LBC tokens without registering as a U.S. Securities and Exchange with the U.S. Securities and Exchange Commission, and said that this happened back in March of 2021, so a little bit over a year and a half ago. The SEC alleged that the LBC tokens were securities, that the startup had violated securities laws by selling them without registering, blah, blah, blah. The LBRY pushed back, claiming the LBC tokens were not securities, of course, and that the SEC did not give it fair notice that the sale of LBC were subject subject to securities laws, thus violating the company's rights to due process. But they have lost this legal battle with a specific judge. And the problem with this, and this is coming out of Gabe Shapiro, is that the LBRY judge reasons that even if the team is completely silent about efforts, no promises, no promotions, no contracts, but then they pre-mine the token to give themselves some tokens, that alone creates a sufficient expectation of profits from their efforts in a common enterprise to pass the Howey test, a very bad result. Basically, just the mere act of giving oneself tokens is enough to produce a common enterprise, is the precedent that was just set, and that's bad because that basically takes care of the whole industry.
It means a lot of things are tokens, according to, or securities, according to this judge. Now, it's one judge.
Just one judge.
This is not the Supreme Court. This is just one case. But yeah, there's going to be some more fights ahead involving this for sure. LBRY says the most effed up part about this whole situation is that even after 5 years of fighting and a court ruling, we still honestly do not know how to legally launch a public blockchain in the US. Does anybody? That's the question. What do we do?
Nope.
I mean, this is an example of, okay, go find kind of the scammers and the Richard Harts of the world, but allow the legitimate entrepreneurs and businesses to legally, compliantly launch a token. Figure out how to do it. What are the bounds? We don't have any clarity still, even after 5 years. And LBRY's just been stifled out. The Web3 Foundation, although Polkadot is claiming a different experience in working with the SEC. So I don't know if you read this tweet thread. It was sort of a mysterious tweet thread.
It was weird, dude. It was weird.
They tweeted this
really
out.
Understand it.
Web3 Foundation, this is Polkadot, the foundation that guides the Polkadot project, announces Polkadot's native token, DOT, has morphed and is software, not a security!
They're announcing that their native token, DOT, has morphed and is software, not a security. They're announcing that it's not a security.
It's just like, you can do that? Like,
I didn't know
I
you
am
can
not a
do
criminal. This is not a security. You could just do that. And so I was like, okay, there must be something here. I actually read the post, and the post doesn't say very much more, David. It basically says they took Gary Gensler up on his invitation of come in and talk to us. Okay. And after 3 years of going in and talking to the SEC, ta-da, now they're not a security.
Wait, Gary Gensler's been around for 3 years?
I don't know. Whoever is...
they've been in talks
Jay
with the
Clayton,
SEC for 3 years.
Whoever was previous to Gary Gensler. And I don't know that that's how it works. Like, there's no kind of letter produced. You just, right. It's just to come in and talk to us.
Somebody went through the dark forest of talking with the SEC, and on the other side, we get this announcement that they are not a security, and we don't have any sort of details as to that.
No corroboration with the SEC.
No for A to B. There's just like complete black box between those two steps.
Great,
and
so
we still don't get any clarity.
There's not even the confirmation from the SEC that this is the case. There's just a post that says, we're not a security. From the project itself.
Well, actually, maybe this is a little bit of 4D chess. If they are announcing that they have worked with the SEC and they are not a security, and the SEC is like,
that's what this is.
No, you're not. We didn't say that. Well, are they like forcing them into giving them clarity? I don't know.
It's like, me first, not it. It's that kind of thing.
Not it.
Yeah. I literally think that's what's happening, because there's nothing substantiating this from the SEC. No evidence produced, just that they came in and talked, and now suddenly they're not a security. They're just software. Cool. Fantastic. Wonderful.
UK bank Santander will block payments to crypto exchanges. Well, I will block payments to Santander. That's the headline.
I don't know that they care, David, but yeah, we'll do what we can. I'm not going to make it. I don't know how banks could do this over the long run. This is cool. On the releases side, what's Zerion cooking up?
Zerion prepares to take on MetaMask with an in-browser wallet. As somebody who has been suffering the Ledger, MetaMask, Chrome, just Bermuda Triangle.
You still have problems with that?
I don't know how, dude. New computer. I have my laptop.
Are you on Windows?
Well, I'm on Windows now, but it was broken before I was on Windows.
I know, it was for a while, and then it got fixed. You have to update
I've updated MetaMask. I've updated Chrome. I built a brand new computer. I've updated the firmware on my Ledger, and I still can't use Chrome in my Ledger. I use
Firefox?
Firefox now.
Okay.
Yes.
Yeah.
Yeah.
One of those two will eventually work.
Anyways, Zerion, please fix. Congratulations on the release.
Do you know Wallet Connect's trying to fix that too?
Yep,
And they
Wallet
just had
Connect
a raise.
raised $12.5 million in an ecosystem round aimed at driving the next evolution of their growth. Congratulations on the raise from Wallet Connect.
Is this a weird week to tell people to get a job in crypto? I don't think so, just because we do it every single week. All right, this is our weekly reminder to tell you to get a job in the crypto. David's not in the dancing mood, okay? And I just don't dance. No one wants to see that. So I'm just going to read a few things out at you. But David, you got to be excited about the scriptwriter. That is the number one position. Bankless
That's going
is
to be a
hiring.
fun job if you want to work with me. Yeah.
Swell Network is hiring smart contract engineer as well. This is a staking provider. Swell Network, a senior front-end engineer. Swell Network, a senior back-end engineer. Uniswap Labs, developer relations. Uniswap Labs, a senior front-end engineer, some NFT engineers from Uniswap as well. Uniswap just keeps hiring. OpenHedge,
Uniswap,
Optimism.
Swell, and Optimism just are crushing it on the jobs.
Look, this is the hottest job board on the planet, I think, because these are all companies I would love to work for.
You know, all of those people that got laid off from Silicon Valley?
You can go check out this.
Yeah, they should go check out the jobs board.
Yeah, absolutely. All right, guys, we will be right back with some more takes from around crypto and also talk about what we're bullish on, even in this crazy week that was overly bearish. We'll talk about some bullish things, but before we do, we want to thank the sponsors that made this episode possible.
The Brave Wallet is your secure multi-chain on-ramp into Web3, and it's built directly into the Brave privacy browser. Gone are the days of managing multiple wallet extensions that put you at risk of phishing, spoofs, and tracking. With the Brave Wallet, you can securely manage your crypto assets across more than 100 different chains, including Ethereum, Layer 2s, Solana, and more, all without downloading risky extensions. The Brave Wallet is easy to set up and removes the headache of jumping between wallets and extensions. It's lightweight, but packed with great features, like built-in token swaps, buying and holding NFTs with a gallery view, and support for hardware wallets. But also much more than that, because Brave is shipping new features every single month, with a mission to make Web3 easier to navigate for its over 55 million users. Wallet extensions are a thing of the past, so get started with Brave's Web3 ready browser today and experience a decentralized web seamlessly without all the clutter. You can download the browser at brave.com/bankless and click the wallet icon to get started. ARBITRUM 1 is pioneering the world of secure Ethereum scalability and is continuing to accelerate the Web3 landscape. Hundreds of projects have already deployed on ARBITRUM 1, producing flourishing DeFi and NFT ecosystems. With the recent addition of ARBITRUM Nova, gaming and social dApps like Reddit are also now calling ARBITRUM home. Both ARBITRUM 1 and Nova leverage the security and decentralization of Ethereum and provide a builder experience that's intuitive, familiar, and fully EVM compatible. On Arbitrum, both builders and users will experience faster transaction speeds with significantly lower gas fees. With Arbitrum's recent migration to Arbitrum Nitro, it's also now 10 times faster than before. Visit arbitrum.io, where you can join the community, dive into the developer docs, bridge your assets, and start building your first dApp. With Arbitrum, experience Web3 development the way it was meant to be: secure, fast, cheap, and friction-free.
All right, guys, we are back. Didn't get a chance to go through the questions to the nation. So I think I'm just going to ask a question that's probably on everyone's mind in Bankless right now, which is crypto dead? Is crypto dead? People are saying that the collapse of FTX is proving that there's nothing really there in crypto, that it's dead, that it's dying, that it's not ready for mainstream, that it never will be. Once again, crypto, is it dead, David? What do you think?
The whole point of crypto is that it cannot die. That is why we're here. You know, Ryan, that I just love the intersection of like nature and crypto systems, crypto economic systems. And that's why I'm here. If there wasn't this property of anti-fragility in these crypto systems, that I wouldn't be here. The whole point is that this biomimicry of the crypto world means that it cannot die. It can take a punch, it can take a bullet, it can take 10 bullets, it can get its head chopped off, and it will always come back if you just give it enough time. FTX, Sam Bankman-Fried, is not crypto. The reason why Bitcoin, Ether, some of these, Uniswap, these things cannot die, that's the point. People may forget about them, but eventually they will return, as they always do, because these are anti-fragile systems, and if you are anti-fragile, you will always come back. It is inevitable that crypto takes over. It is inevitable that Ether goes up in price so long as Ethereum gets built upon. And so crypto cannot die. That's why we are here.
Dig in. Let's get some grit here. I mean, do you really think that someone by the name of Sam Bankman-Fried?
He literally had bank in his name, and we gave him billions of dollars. What were we doing?
Do you think we're going to let Sam Bankman-Fried kill crypto?
He can't kill crypto. He does.
Not
No one
on our
has the
watch.
power to kill crypto. That's
Not
the whole
on our
point.
watch. Yeah. I mean, I think the answer, as it has been in the beginning for this industry, is return to these values of DeFi, Ethereum, and going bankless. Let's get to some takes this week, David. This one from Hunter Horsley. He says this: the future of the crypto industry is two paths. Number one, onshore regulated U.S. platforms and firms, or number two, fully decentralized. Investors have lost trust for the in-between.
Love
Remember
it.
the whole CDeFi thing?
CDeFi? Yeah, get the hell out of here.
Remember this whole like blend of like, yeah, we could have a blockchain, but it's like fintech. It's like, it's the space in the middle that is just ripping to shreds. And I think that's what my take was. Like the fintech bro, or the finance bro era of crypto is over. I feel like that's what we got a lot of in the last couple of years.
Get back to being cypherpunks. Yeah,
cypherpunks, or you go full bank, one or the other.
Cypherpunk or bank, yes. And this fits into my model of, if you can be regulated, you ought to be regulated. If you can't be regulated, that means you're fully decentralized and you are regulated by code, which is the point of why we're here.
This is some context for us. The worst events in crypto history: the Mt. Gox hack, 2014, the DAO hack, 2016, the Terra Luna collapse, 2022, FTX sells to Binance, 2022, Three Arrows Capital collapse, 2022. Of course, FTX didn't sell to Binance, but the FTX collapse, we'll call it. Three of the worst events in that list in crypto happened this year. If you survive this year, you've earned your stripes.
Yeah, this actually really makes me reconsider. Like, last bear market was bad because we all ran out of money, but this bear market's bad because we
ran out of legitimacy.
Yeah, we ran out of legitimacy. Yeah.
I think
the end of this tweet I really, really like. If you survive this year, you've earned your stripes.
Oh, definitely.
I remember, I think it was like 2020-ish, early 2020, where somebody called me an OG for the first time, a crypto OG.
Yeah.
And I got into crypto in 2017.
It's because you survived it.
I didn't feel like an OG, but somebody called me an OG in 2020, and then more people started calling me OGs, and more people started calling me an OG. I mean, if you got in crypto in like maybe early 2020, I think your time to start being considered an OG is pretty damn soon here.
You've earned it. Yeah.
You've earned it.
If you're through here on the other side, I think that this bear market is no less harsh than the 2018 bear market.
2018 was harsh because we all ran out of money, but we didn't get rug pulled. We didn't get scammed. We didn't have these collapses. We were just poor.
And
now, like,
many of us did stupid things with ICOs.
Yes. Yeah. Making it through the gamut of this bear market, I think, was maybe minimum twice as hard.
You're gonna feel great on the other side.
You're gonna deserve the hell out of it for sure.
Through it, you're gonna feel great. This is a take from you, David. I'm gonna read it. The sad part is this week's events proved why we need DeFi, but the DeFi brand has lost meaning. Luna, Sesta, Cronier, farming, old school DeFi is the bright shining star keeping me going. Uniswap, DAI, RAI, Aave, Gnosis. But we don't even have a name for it. David is sad. You have been sad this episode, David.
Yeah, it's been
That's
sad
not
boy.
like you. You're super DeFi as a brand.
Yeah, we've
polluted.
lost our brand, man. And this came out of an inspiration from a conversation with Vitalik I was having in Telegram. So actually, this is basically Vitalik's take, but he didn't tweet it, so I did. But yeah, man, like, what do we even call like the good stuff? Because like even the DeFi brand, like Web3, no one takes that name seriously anymore. DeFi is now associated with scams for the outside world. Like, what do we call the good stuff? What do we call the protocols that are actually anti-fragile? Like, we don't even have a name for that. Or even our name has been stolen from us.
Well, we don't. I mean, but this has happened to other names in the past, like blockchain. You remember blockchain used to mean something, and then it was enterprise blockchain, and then it got kind of diluted and stupid. But yeah, it pains me the most, I think, to lose the term DeFi.
Yeah.
Remember when we originally wanted to call this whole thing open finance?
OpFi.
Never stuck. I don't know about that. Maybe bankless finance. Maybe there's a future for that.
Yeah,
David.
maybe we just call it bankless. We'll just do that.
We'll do it. See if anyone else does.
Yeah. People do.
This is another take. Thank God Gary Gensler chose to protect us from checks notes. Kim Kardashian. Woo!
I feel so protected.
Gary, what's the background on this? There was a settlement with Kim Kardashian for pumping a token.
For pumping a security, and then they charged Kim Kardashian, and then Gary Gensler went on the speaking tour to say, "Hey, we got Kim Kardashian for promoting got her."
Got the bad guy.
Yeah. Meanwhile, I'm gonna go meet with Sam Bankman-Fried for lunch.
$8 billion in the hole later.
Yeah.
Very sad. Although, to be fair to Gary, a lot of us missed that one. A lot of people.
But it's okay. It's not our job. It's his job. That's his job.
All right. Fair enough. All right. Can you find something to be bullish on? Got to ask you that question as we do every week. What are you bullish on?
So Ryan, I bottom ticked Ether so far. Is what I'm bullish on. So I don't.
People don't know the trading vernacular. What's bottom ticking mean, David?
Is that you? Are you asking?
I know what. Come on. I know what bottom ticking is.
So I set two limit orders, one at 1150 Ether and one at 1075. I think the bottom of ETH was like $1038, $1,038. And so my buys went through like while I was sleeping. I don't usually set limit orders. I usually just hit market buy, but had some cash. Bought on Coinbase, which I don't usually do. But I usually use Gemini, but this time I use Coinbase for reasons. And I just feel really good because it's up since then. And so I just feel good about buying at least what is a local bottom. And let me tell you, if I had bought like 2 days ago and then it dumped, I'd be feeling way worse. But I'm just bullish on ticking the bottom. I've ticked the bottom pretty well so far.
Well, you must believe in the future of this whole ecosystem. You're still buying ETH at these prices.
Yeah. It's the only thing I really believe in, man. It's
ETH?
like
ETH is still the asset you return to?
Yes, 100%.
Is this kind of what the big Bitcoin maximalists felt in the aftermath of 2018, 2019, right, where they were just like,
stop venturing out, stop going to the frontier, just stick with the thing you know is going to
rebuild
work.
Our base.
Let's go back to the core. Let's go back to the base. ETH is UltraSoundMoney. I bottom ticked it. I'm happy about that.
I'll just remind people, bottom so far.
Well, I bought 897 during the Alameda crash, or it's not the Alameda. I bought 897 during the 3 Hours Capital crash, and then I bought 1075 at the Alameda FTX crash. I actually think that like everyone's worried about contagion in the future.
Yeah.
Like I'm not one to call bottoms, except so far the last
you
time
you are calling bottoms with your
when
your buys,
the 3 Arrows Capital, the worst when everyone was freaking out about 3 Arrows Capital about there's going to be so much more contagion in the future. That was actually the moment to buy. Yeah. And that's what people are saying right now. There's going to be so much more contagion. We're going to have to see the contagion, see how bad the contagion is for Alameda and FTX. That's when I bought. And I'm feeling good about it. That's what I'm bullish on.
I'm still waiting for my triple digits, to be honest, but may not get there.
You may not get there. All right, so if that's not what you're bullish on, then what are you bullish on?
David, I'm bankless. I'm bullish on the bankless thesis. Mm-hmm. I think it's just really struck me that crypto has learned through 2022 that it can't leave its destiny in the hands of the banks, of a bunch of centralized bankers. And I think we veered into that. It's just like there's something very easy about solutions like FTX. Someone takes custody of your keys and the user experience is better. There's no gas fees, and there's someone with a suit responsible for it, willing to go in front of Congress. There's something very settling about this, right? And we did settle for it. We settled for centralized exchanges, and that's been the problem. But I feel like the bankless thesis has held really strong. Like we have to rebuild the future of crypto, not on centralized exchanges. I mean, like we could never build them on centralized exchanges. We have to rebuild the future on DeFi. So I kind of feel pretty good about the bankless thesis coming out of this. It's just like crypto banks are not going to solve our problems. They're going to cause more problems. It's interesting. A lot of our conversation in the past few months before this debacle has been about censorship resistance. Right. And that is one of the benefits of decentralization, right? Censorship resistance and freedom, and that's super important. But here, this was not a failure of, like, Sam was not censoring anyone's transactions.
Right.
He was stealing the money, okay? Like, he was taking depositors' funds and doing other things with them. It was a trusted intermediary problem. It was a banker problem. We got screwed by the bankers again, David. Okay? This is like 2008. This is like every sort of banker crisis that we've seen where we've been screwed by the bankers. This is why this is not a problem with DeFi. It's not a problem with Ethereum. Like, DeFi didn't do this.
Right.
DeFi solves this problem, and yet here we are in this place. And this is why I understand your sadness and frustration. Part of this episode is just like, didn't we already know this? Aren't we better than this? Aren't we supposed to be the ones who aren't trusting the Sam Bankman-Frieds of the world? So anyway, I do feel like the bankless thesis has kind of held up, even while crypto is suffering, and we're probably going to rebuild this entire space on top of that thesis. And this is why I am ultimately optimistic and bullish that we come out stronger. And I'm hopeful, listener, that if you lost some money this week, if you're affected by FTX, I'm sorry. That's really tough. Like we said in other times this has happened in the past, take some time with family, go for a jog, clear your head, take a break, step away for a bit. We hope you come back. Because I think that people in crypto need veterans with the type of experience that you've just received. If you didn't have any funds in FTX, you saw what happened to those around you. And crypto needs people with that experience. This is how we make a stronger layer zero for next time. Because who's going to warn the class of 2025 or 2026 when they go do something stupid? This is the only reason David and I know enough to kind of talk about this, going bankless and about it's just because we've seen it before. And so one generation, it's their responsibility to teach the next generation. So you're developing your battle scars, your veteran skills, and we need you here, and we need you to push the bankless thesis forward.
Yeah, that's the cool thing about crypto is that it takes about 3 years to become a veteran. There's not many industries where, like, usually you need to be 30 years in experience in something to be a veteran. But like, this is how human wisdom is passed down from village elders to the young folk. And we actually have the privilege in crypto where it only takes 3 years to become like a village elder who can be wise.
Because every year is like 10. I feel like this week was like 10 years for me, dude. I'm exhausted.
I'm exhausted, man.
I've rarely been this tired. Yeah. All right, let's end it with the meme of the week. What are we looking at, David?
Meme of the week. We are looking at FTX Arena in Miami, but it's actually a Spirit Halloween store.
Oh my God,
because
dude.
that's where rundown buildings go to die.
You gotta laugh or you'd cry. Guys, we hope you've enjoyed Bankless this week. It's been a crazy week, and we have a moment of zen for you, so stick around for that. But of course, as always, risks and disclaimers. Crypto is risky. You could lose what you put in, but we're headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
Last thing that I'll say is if you look at what precipitated some of the 2008 financial crisis, you saw a number of bilateral, bespoke, non-reported transactions happening between financial counterparties, which then got repackaged and releveraged again and again and again, such that no one knew how much risk was in that system until it all fell apart. If you compare that to what happens on FTX or other major cryptocurrency venues today, there's complete transparency about the full open interest. There's complete transparency about the positions that are held. There is a robust, consistent risk framework applied, and we're excited to work with the CFTC on our U.S. licensed and regulated venue.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.